2 of the best trading book I'm currently reading. Unlock the secret of trading freedom as well as the price action. Join me every Saturday as I break down Ashwani Gujral's How to Make Money in Intraday book chapter wise. Starting right now with chapter number 2, which is about understanding of the candles. Just in case if you have not seen my chapter 1 review, I will attach that short here so you can go and check chapter 1 review. And today we are going to start with chapter number 2. In chapter number 1, we have learned moving averages and the market basics. In chapter number 2, author covers the type of candles, the rejection candles, and how we can utilize it for our intraday trading unless investing. So let's start with the chapter number 2. Alright, so in today's chapter number 2, understanding the candles, first we will be understanding the basic anatomy of the candles and the important factors which we should understand while reading the candles. In this chapter, we will cover first the three main types of the candle, and then the characteristic of them. So the first thing we are going to cover the 3 main types of the candle and then characteristic of the candles. Alright, so before starting this 2 topic, author explains candlestick help in timing our trade entries and exists. Further, author says our success in the market, it depends upon what trade we enter into and when. According to author, he says candle answers the second part of the question, which is when. When we enter into the trade is what candles answers us. Alright, now we will be learning the anatomy of the candles. Just as a picture is worth 1,000 words, a candle is worth many words, price quotes and interpretation. A candle is a graphical representation of the price traded during a certain period of time. So I will explain you here what does it mean. Let's consider the 5-minute candle here shows us the price movement happened in the 5 minute, right? Similarly, the 1-minute candle shows us the price movement happened within 1 minute. Similarly, every time frame candle shows the price movement happen within that time period. If you know, you can skip this part, or this is for a beginner. Let's consider if price is opening from here and closing it here at high level. So let's consider this is 5 rupees and this is 10 rupees. Okay, so if any candle is opening here and closing at 10 rupees, this we will consider as a green candle, right? So similarly, opens at 10 and closes at 5, this we consider as a red candle. Right? I will try to explain in a very easier way. If you are a beginner, you don't have to watch anything else apart from this. Okay, so let's consider this is my red candle and this is my green candle. So whatever the candle will form, we will call this as a main body. It can be green, it can be red. Then later we come to the shadow. This wicks, if you see, it can be long, it can be short as well. This will call as a wick of the candles. If you see any candle, this will look like a wick and the candle which we burn. This we can even call this as a tail. If we see a good bullish movement in the market, so the candles will be strong green or might have a small wicks or tails. But if the candle is not that strong or the bullish movement is not that strong, so the upper tail or wick can be more and the body can be small. This means the bear are in the power now. Similarly, if in the market we get a good bearish movement, so the candle we see is a good amount of red or with the small wick. But vice versa, if the movement is not that strong, or maybe if it's controlled by the bulls, then we see a strong wick or tail with the small body. Okay, so now if you understood this concept clearly, I'm going to tell you one more thing over here, that small red candle or the body with the long wick will be the more bullish than the bearish. If it is a small green candle with long tail or wick, it will be more bearish than the bullish. If red candles are forming like this, bear will push this price from here to here, making the comeback of bull power. Hence, this candle is more bullish than the bearish. Vice versa, if the price is going up like this and the price reaches till here, and from there bear will push this price till this level, so it means the bear are in a power right now, and further this price can move down. Okay, so next topic is important factors interpreting the candles. Okay, so now we are going to learn how to read the candle. The first part will be candle colors. As we know, we have 2 candle colors, green candle and a red candle. Green candle we consider it is for bullish or bull, and the red candle we consider for bearish or bear. Second is size of candle body. So bigger the body of the candle, we learned what is the body, right? Bigger the body of the candle, that much strong is the trend. Trend as in it can be a bearish or bullish. If any candle is making small body and long wick, that is not signal as a strong candle. So bigger the body, bigger the victory of winning side. Third is length of the candle shadow. As we discussed earlier, longer the shadow or wick or tail, it means it is not a strong body and it can retrace. Retrace as in it can reverse. So this we will consider as a reversal candles. So the fourth and very important point, candle closing level. Always make sure you are waiting for any candle to close and then only you are judging the candle. Before any candle close or in any time frame, we should not take a risk of judging the candle. Okay, so author is saying here, if you have read any other videos or any other books, you will see majority of the people are talking about the 50 plus candle types and its use. But in actual market, this doesn't work. So in actual market, barely, according to author's experience, he is saying that we can only use 3 major candle patterns and we are going to talk about them. These 3 candles type will matter the most and you can spot them in the regular market for your trading. Alright, so we are going to start with now the very important topic, 3 types of candle and what they reveal about the market's mind. Author is saying the first type of candle is undersized, namely XXS size or Lilliput candles. Second type is a giant candles or double XL size or super size candles. Third are the candles with extraordinary long shadow or tails. Alright, so we are going to start with our first type of candle, which is undersized. Okay, so whenever we consider a candle as an undersized Lilliput or double XS candle, when we compare the Lilliput candle to the previous candles, it can be a small one. So there is no formula. Author says there is no formula or anything that which interpret the what are the measurements of the small candles. It is just that we compare that with the previous candles. The easy way to understand is the Lilliput candles are those where the opening price and the closing price, there is no much difference. That is what we call as a small candles. Alright, the doji candles which I am showing you on the screen is the variation of the Lilliput candle. In the case of doji candle, the body is not just small, it's almost negligible in the size as you see in the screen. This candle body indicates neither a bull victory or a bear victory because the price closes almost where it opened. Generally, this kind of body or small tails of candle indicate a phase of pause. So let's consider we are having the price is going up and we are seeing a very small candle which is a doji candle. So this can be an interpretation that after a huge move up, the price is going to stay in this phase for some time. So you can say that price is at a pause stage. Now we have to wait for either for a price to move upside or downside to take an entry over here. So the second type of candle is supersized or giant candle. Alright, so in an easy way I will try to explain this concept. Let's consider the price is moving up and it is becoming small. Here we can consider now that the bears are taking over because the candles are forming small here. So the market will come down. So when the bears are in power, so they will start making a big size candle compared to the average candles. So whenever the market makes the big size candle, I mean body we are talking about here, not the shadow, we consider this, the market is in a bearish trend right now and we can enter the trade over here. If the prices are making the average candles and then indecisive, then we can say the supersized candles are forming, so we can say the bull are in a control. So as you see in my screen, author is saying when you see a supersized candles, that's when you should immediately sit up and take notice. It could be a breakout or it could be a reversal. It could be a new start or it could be an end to the current trend or even a consolidation. It would also mean that there is a high probability of seeing further levels in the direction of the big candle. It could be a time to act. So here the author has given very nice explanation of one thing. So let's consider our price is moving upside and then we have indecisive candles and a huge candle comes here. So author is saying the more this candle is covering the previous candles, the more stronger, powerful is the downside move or backside move. So let's learn about what are the reversal rejection candles. So always remember tails or shadow of the candles are equal to rejection. It can be a red candle or it can be a green candle. So remember, tail or shadow is always equal to rejection. Okay, when I say always, we have to emphasize more on the long shadow or tails. So tail or shadow is equal to rejection in the price. So next, let's learn about the key points for accurate candle reading. How to read the accurate candle. Okay, the first key point is let the candle form fully before even you start guessing it. So always remember, whenever you are expecting any breakout or breakdown, so allow that candle to fully form here, otherwise it can be giving a long shadow and then if you take a trade here, as we discussed earlier, you will end up in a loss. So the second point is before looking for a trend reversal signal, look for a trend first. So example, if the price is going up, if any reversal candle is forming here in middle, so we should not consider it. Understand the trend first. It should form, the reversal candle should form somewhere at the resistance or support, and then only you should identify that this is a right candle for us to take a trend reversal trade. So always remember that. So the third point is candle work better on the comparatively longer time frame than the smaller one. 5-minute time frame will be more reliable than the 1 or 2 minute, and 15-minute time frame will be more reliable than the 5-minute or 3-minute time frame. It doesn't mean that we cannot trade on 5-minute or 15-minute. The author is just saying that always check your higher time frame to take a trade confirmation, because there will be a higher participation compared to the lower time frame. Okay, so the fourth point author is saying you don't have to take any trade whichever you see the first. Use a proper strategy, proper confirmations, and then only enter in the trade. The fifth point is always wait for the pattern confirmation. As you know, most chart patterns require confirmation before they work out on the chart. So wait for that confirmation. Do not hurriedly enter into the trade or before even the breakout or breakdown of the patterns, because few patterns might require a breakout, a breakdown, or additional candle to form. So wait for that and then only enter in the trade. The sixth key point is location where the pattern forms is very important. Alright, so let's understand why the location of any pattern or any candlestick pattern is important. So let's consider these are our 3 EMAs, 20, 50 and 200, as we discussed in chapter number 1. So if you see, if any candle is coming on EMA 200 and if it is making doji candle with huge shadow or wicks, so it is easy to understand for us. From 200 EMA it is taking a support, and from here price might go upside. Hence the author is saying location, you can either use any pattern, any chart pattern or any kind of EMAs. Location is very important where the candles are forming. The seventh key point is timing of the pattern. According to the author, the timing of the pattern formation or the chart pattern or candlestick pattern, the timing is very important. As we know, the Indian stock market opens from 9:15 AM till 3:15. So from this time frame, the important time frame which we can identify the trades and maximum people trade is the first 1 hour of the trading session, that is 9:15 AM to 10:15. So author is saying in this time frame, look for any chart pattern or any candlestick pattern if it forms, which is coming in your setup to take a trade. The next key point is a single candle doesn't make a story. Alright, if you get any rejection candles from top or bottom, so do not assume or do not enter into the trade only considering one candle. Wait for another candle formation and then only confirm your trade entry. Okay, so the next key point is multiple favorable factors leads to move that sustain. That means in any meaningful trend, we have to understand minimum 3 or 5 or 8 candles should be there in the trend to consider that as a confirmed trade. So 3 or 5 or 8 continuous candles to form a complete trade. The 10th key point is new trends give higher probability trades. So according to the author, he is saying instead of entering somewhere here, somewhere here, somewhere here, do not enter in the already moved trade. Wait for the price to come or retrace at the EMA level and then go for this move. Wait for a price to come on this level for retracement, and as we discussed in chapter number 1, it will accumulate the fresh buyers and then move for the trade. Here you will get a higher probability. Vice versa, if you have any support or any resistance and if you see any candle giving the breakout or breakdown, so this is the much more favorable for you to take or enter in the trade rather than somewhere in between. The very important 11th key point is trending with her trend carries a higher probability of success. In this, the first thing he is saying, check the volume. Let's consider this is a resistance. Any price is giving a breakout over here, and if the volume is also increasing from the average, so this is a confirmation candle for us with respect to the volume candle that we can enter in this trade. Second most important thing is 50% retracement. So I hope you all know this theory. If the price is moving this, I need to calculate ki if the price is going here, till when it will come down or will it go down only. So in that case, what I will do, I will use a Fibonacci tool over here, which will be plotted, which I use daily in my trading. So if this level is coming at 50% retracement, it means we are in the safe zone. It means the trend is uptrend only. If any price movement is happening below the 50%, it means the trend can change. So we have to make sure we are watching this 50% retracement level with the candle formation, which we have learned in today's session. If you like my video, do not forget to subscribe and like this video. If you have any suggestion, if I can review any other books which is regarding trading, you can comment me down. Okay, so that's the end of this chapter number 2. I'll see you next Saturday with the chapter number 3, which is about how to trade these candles in your intraday. So stay tuned. See you on next Saturday. Thanks for watching.